Hi, welcome everybody. I'd like to welcome you to the Family Office Insights webinar. Thank you everybody for joining us this afternoon. As you may know, you can see us and you can hear us, but we cannot see and hear you. So if you do have a question as we go along, please don't hesitate to type it into the Q&A or the chat box, and I'm sure Jarrod would be happy to answer all your questions. With us today is Jarrod Randolph. He's with Modern Cabin, and he's going to do a presentation on that for you. I'm just going to give you a few minutes to all pop into the room. The seminar today will go for 30 minutes. And with that, Jarrod, I'm going to hand it over to you.
Wendy, thank you so much. All right, let me open my screen here, get everyone started for the presentation. All right, so again, my name is Jarrod Randolph. I'm the CEO of Modern Cabin. I want to thank everyone for joining this afternoon. The way we'll run this is we'll do some background information on the investment itself. We'll do general information on the investment, talk about the economics, and then introduce the team. So we're very excited to present a concept that is 2.5 years in the making, and it started with a very general conversation with myself and my business partners about our travels and the experiences that we were having staying at the Airbnb and Verbos of the world. And we realized that there was a challenge in the marketplace, and that was finding single-family home rentals that were short-term, that were professionally managed, high design. You know exactly what you're going to get, like you know exactly what you're going to get when you're going to a Hilton or a Four Seasons. And we started having this conversation with friends and family who had the same experience, where you sit down in front of your computer, pick a destination, go on Airbnb or Vrbo because you want to have an authentic experience versus staying at a hotel or resort. You weed through a myriad of listings that are not the most attractive listings. You settle on something and you're never sure whether or not the Wi-Fi is going to work, the bed's going to be comfortable, it's going to be clean, and if you're going to have a contact person or someone who can help you with services once you arrive. These questions all presented a massive and scalable opportunity that we saw really was a vast gap in the marketplace of short-term rentals. And born out of that was our concept for Modern Cabin. Modern Cabin is a tech-enabled real estate hospitality brand developing and professionally managed modular single-family short-term home rentals. Now, I always take my time and read through that and pause because I'm going to break it down for you. And all of those words, there are many, they mean something. In terms of tech-enabled, we're building modular homes that we're using technology and a BIM port system to create more construction efficiencies and reduce time of delivery. We're also developing technology around the management of the real estate assets themselves, excuse me, and the guest experience. From the standpoint of the real estate, we will own and operate and have a controlling interest in all of the homes that we build. And in terms of hospitality, we are hospitality light. So we don't have turn down service every day, but we have services on demand. We can stock the refrigerator, do cleaning, have property managers come and sort out any issues that guests might have. The first stage, and where we are right now in the process, is we are raising to build 24 cabins that are each 2,000 square feet, 3-bedroom, 2.5 bath. We're also building mini cabins on each property, which are roughly 250 square feet. They are all they are all on 3+ acre sites. And here we go. We'll kind of scroll through to give you what the breakdown looks like of the homes. Before we get to that, I actually want to cover some of the pros and cons that we looked at before developing this. So as exciting as this opportunity might sound, one of the key things is we wanted to make sure that the fundamentals of the market were aligned with what we thought the opportunity was, which is to build professionally managed short-term single-family home rentals. The world's been completely unpredictable over the last 12 months. And even though the markets have performed well, it's been unprecedented downturn in various segments of the marketplace. So we started to track consumer behavior. and the consumer behavior was trending towards people relocating from major metropolitan areas to more suburban or rural areas and looking for long-term rentals, but also short-term rentals. So what we first started to look at were any of the cons that we might face. So what are the risks associated with the market segment, and what is most important with our go-to-market strategy? The product type. We wanted to make sure that there wasn't an oversaturation of product, and the numbers and statistics show that there's a massive need for more single-family short-term rentals in nearly every market across the United States. The target consumer has more flexibility with work as they have a fundamental change, and that has pushed more of our target market consumer to take on short-term rentals as opposed to being in these major cities, and also be more flexible with their time with their families. The cost to carry, we looked at, before we even looked at the returns, we said, all right, if we're going to build this, what are the costs going to be that we need to make to cover it? And our occupancy would have to be roughly 35%, and that's before any debt service to cover our cost. And also protecting our investor capital. What were we doing to mitigate as much risk as possible? And I'll go into this a little bit more in detail, but we have various ways in which we could operate this asset if the business plan were to be askew. What's most important about creating a successful brand and also gaining market share is timing. We have a very quick to market schedule, which is for each of the homes that we build, which is under a year because we are building modular. The execution, we have a stellar team that we've put together who are experts in their domain in real estate development and construction, and also our marketing strategy. Our marketing strategy is an omni-channel marketing strategy to make sure we're getting as much reach as possible. So we recognize that these facts and that the numbers on paper look really good, but to go beyond that to protect our investors' capital, we're really building a trusted brand with Modern Cabin, and we're mitigating the downside risk. And what that really means, and then we'll jump into some more meat on the project itself, is we have multiple sources of revenue. So we're bringing in revenue from development fees, rental income, and operating income. We are keeping the balance sheet low, where we will, as we build additional propcos or additional properties, we'll have additional propcos so we can keep the balance sheet low. We have the ability with this asset that if it's underperforming, unlike if you have auto streams or you have a 60-room hotel, we have the ability to liquidate the asset one-off if need be, or we could take them from short-term rentals to long-term rentals just as a backup plan. And we're building a trusted brand. Everyone knows the name Airbnb and knows WeWork, but Regus was there before Airbnb, and Booking.com was there. Booking.com was there before Airbnb, and Regus was there before WeWork. And the reason they have been so successful is they have good product and service, but they have a great brand. So we're working to build a great brand with Modern Cabin. The asset profile, we are identifying areas that are 2 hours to 3 hours outside of major metropolitan areas with mountains and lakes, because that gives you 4 seasons of activity. Our target market to start, where we own 2 pieces of property already, are in the Catskills. Again, we're building 24 cabins, 3-bedroom, 2.5 baths. This will give you an idea of what a modern cabin looks to us. Our interior design, our internal design team put these design schematics together. They are all 2 stories, about 1,000 square feet per floor. As you can see, you have double height ceilings here. This is the back side of the house. This is the side and the entry of the house where we have a fire pit. The back side has a jacuzzi. And we also are building mini cabins, and these mini cabins here can be used as a flexible space, whether it's a gym, an office, a kid's playroom, etc. Give you some shots here of what the interiors look like in our hot tub, which everybody seems to love. Again, the double height ceilings. Design, aesthetic, and finishes and quality are very important to us and what we have focused on with creating this. And then one more of our interiors, bedrooms, bathrooms, and this is what the outdoor pod as an office would look like. Floor plans, primary bedroom on the first floor with a big great room, 2 bedrooms on the second floor with a shared bathroom. Our pod bathroom. The amenities, we will have patios with decking around all of the homes, fireplace inside, a fire pit outside. We are using something called the Darwin System in partnership with Delos. It is the world's first home wellness intelligence platform, which includes health and efficiency measures for air, light, water, and sleep environment, electric car chargers, and again, we have the mini cabin flexible pod. So let's talk about our target clientele. The reason we created this product is what our research showed, that the consumer base that we want to target is looking for. They do want space, but they don't want an overage of space. They're not looking for a 5 or 6 bedroom, 5,000 square foot home. And they have graduated from that glamping, staying in a 100 square foot Airstream or small mini cabin into wanting to have a home where they can share with their families and their friends. Our target clientele is average of 100K plus in annual income. They are New York City weekenders as our primary market. Our tertiary markets are Boston and Philadelphia, as we're within a 2.5-hour drive. Those who are outdoor enthusiasts, skiing, water sports, hiking, horseback riding, families who just want to have a weekend away or even longer away. Those who are the foodies. There's a great culinary scene in the Catskills that we believe we will partner with and be able to target consumers that specifically come up for the culinary fairs and the restaurants. And also weddings are big in the Catskills, and we will partner with wedding venues to provide housing when the weddings, when there are planned weddings. Go-to-market strategy. Again, all of this sounds great. We've got beautiful design. We have thought about the pros and the cons. We've identified our target market, but we've got to get the people through the front door. And the way in which we're doing that is we are working with OTAs, online travel agencies such as Airbnb, Airbnb, Vrbo, and Journey. We'll do direct booking through our platform, staymodern.com. Social media, marketing, and advertising that we will do some paid. And additional marketing will include marketing through the influencer partners and partnerships with community partners. So those who are service providers and F&B, because the key with us is we're a brand that is building, managing, and operating short-term rentals. We don't have an F&B component. And the key is there are so many good purveyors within the market that we can partner with. We don't want to create added expense and overhead, which makes it harder for us to get to cash flow positivity. And then some core partnerships with other membership companies such as Noya House, Classic Car Club in Manhattan, and Brick and Wonder, which are all regional high-end membership clubs or groups. So for all of this that you get, the home, the pod on 3 private acres, and what we'll be doing, by the way, we'll build 3 homes, 4 homes, 5 homes in a cluster, and we're doing that for logistical reasons with planning with the township, so we don't have to go through major subdivisions and we can build as of right. How much is all of that beauty going to cost? Our average daily rate is $750. And this is based off of market statistics in the area for the top tier professionally managed product. We have extensive data pre and post COVID, which support our figures. But we also look at our worst case and our best case scenario. Our worst case is $600 a night. And again, these are all 70% occupancy. That returns roughly 19% cash on cash return. $750 a night, which is 36% cash on cash return. And that is our target. And our best case scenario would be $900 a night, which is roughly 53% cash on cash return. So let's talk a little bit about the financials and where we are right now with the company. We have raised and closed out as of last week our $1.2 million friends and family capital raise for GP, which we're very excited about. That happened relatively quick. And we have recently started, as of this week, our $10 million LP capital raise. The numbers that are important about that 10 million raise is we're looking at a 52% CAGR within the first 7 years. The cash flow positivity is reached in year 3. Cash is paid back, or investment is paid back in year 5. And again, at the $750 per night, it is 36% roughly cash on cash return. And what you're investing in within the company and the $10 million, you're investing in the holding company. And under the holding company, you have the PropCo, the OpCo, and the BrandCo. So the PropCo are the real estate itself, the 24 homes. The OpCo are the operations and management. And the BrandCo is the IP, the website, the technology that are all related to the Modern Cabin brand. Funds allocation, that $10 million will go towards acquisition of building sites, construction of 24 homes, hiring our management team, marketing and communications, website and mobile partnerships, and other G&A expenses. And let's go over the team. And then we've got one more little special element that we want to speak about. And then I'm very happy to take anyone's questions, comments, and concerns. So my background is I've been in real estate now for 20 years in New York City. Sold over $2 billion in real estate, transacted in placing $300 million for my family offices and high net worth individuals. It's all real estate entrepreneurship, development, marketing, and sales. Got some accolades along the way, like Forbes 30 under 30 and the Real Deal 35 and under Rising Stars. Now I'm above 35 now, but I throw that out there. My business partners, Sterling McDavid, her background, and she's our managing partner, her background is investment banking at Goldman. She's also an entrepreneur as well, has owned a couple of different brands, a not-for-profit, and she's a real estate investor herself over the last 15 years. Sean McGinley is also a managing partner. His background is real estate and business development. He has managed some major portfolios as well as worked with New York City developers developing luxury condominium and mixed-use buildings over the last 10 years. And Scott Williams, who is the former Chief Creative Officer of Starwood Hotels and Resorts and for a former Chief Marketing Officer of Morgan's Hotels. One little special element that we think is very important for us to cover, and then I will full stop and take questions, is our partnership with Shira Hospitality. Shira Hospitality is the not-for-profit that works along with operators of hotels and resorts, such as big brands, Six Senses, Hilton, Four Seasons, The Standard. When those operators go into remote regions or rural regions, Shira Hospitality will partner with them to set up a school to educate the locals in hospitality services for entry-level and mid-level jobs within the resorts so they can hire locally. The reason that this is key is one of, as we were doing our research, the pros and cons, what we needed to look out for in the market, and we spent about a year doing this, we realized that the common thread was purveyors in hospitality and F&B needed more trained staff. So our community give back is to build the Modern Hospitality School in all of the markets that we go to, starting first in the Catskills, backed by or powered by Shira Hospitality. We'll come in, we'll graduate anywhere from 40 to 50 students with our hospitality school over a 6 to 8 month period. Some of them will work for us, but the key is now there's an educated pool of hospitality workers that the other partners that we will have in the market can pull from. And we're very excited about that. So that is where I will stop and take questions, comments, and concerns.
Jarrod, thank you so much. Can you exit out of that for me?
Sure.
Perfect. So if anybody has a question, please type it into chat or Q&A. Can you explain a little more to me about the technology piece and the potential for revenue with that piece?
Absolutely. So we are working together with a technology provider. Their name is Journey. Journey currently works in the short-term condominium and hotel hospitality rental segment of the market. And they have created technology that links security systems, sound detection systems, CO systems that are interior within the homes, as well as streamline the property management process from scheduling maintenance, scheduling housekeeping, and anything that needs to be taken care of for the home itself. And then it all reports to a back-end paperless system online. They've been doing it in the condominium market. We're building product that is specifically white labeled for property owners of short-term single-family home rentals. We've got a lot of great technology out there from the standpoint of booking platforms and of management platforms, but not platforms that are tied directly into the functionality of the homes themselves. Will create technology that can ultimately be white labeled and sold in the future around the single family home rental. And included within that technology, you'll have a concierge platform where you can say, I'd like to have my refrigerator stocked. The toilet needs to be fixed. Can you please come and fix the toilet? Or I have an activity that I would like to do, such as skiing, hiking, or I need my dog washed, all on that platform. And the reason our platform will be a bit more seamless than some of the other products that's out there. And by the way, there are some products that are out there, they're just not great, but we're elevating the level, is we'll take and catalog all of the other service providers within that marketplace. And whether it is a coffee shop, a bookstore, the florist, restaurants, all creating that kind of Zagat's Urban Daddy type online guide where you can do direct booking through our platform as well. So that's the property and the guest experience technology. The technology for the build, we're using a BIM port system, which streamlines the build, construction and engineering, architectural design, and procurement into one platform. So we can work directly with the modular manufacturer to assure that the product that we expect is being built on time with real-time updates and delivered as scheduled.
So two other questions. I noticed on the slide presentation that the figures were based on a 70% occupancy.
Mhm.
Is the occupancy right now for like Airbnbs, is it at 70%?
Well, the occupancy right now for Vrbo and Airbnb is 100%. So we decided we weren't going to go with 100%, and we would base it off of the pre-COVID levels, which basically span between 86% and 72, 73%. So we still use the pre-COVID numbers because the business plan worked pre-COVID. This is not a post-COVID business plan. We've been working on this for 2.5 years. COVID has accelerated the excitement that we're seeing in the marketplace, but it still worked before all of this happened. But occupancy right now is 100%. And that's according to the data, which we have a data room and we can allow any investor to access and look at.
And I know the concept of under promise, over perform, but I also noticed in the slides that it said revenue positive in 3 years. But you had said that construction might only take 6 to 9 months. So can you explain that difference between 6 and 9 months and 3 years?
Absolutely. So instead of making a massive investment on the operation side, some of the cash flow that comes through the properties flow into the operations to cover the cost of the operations. So we don't have money out there we're just, have $3 million sitting aside for operations. We have enough sitting aside for operations that get us through the first 18 months. Then when the properties are cash flowing, we're able to use that to operate the company. So it's bootstrapping is not the word that I'm looking for, but the only word that I could come up with thinking on my feet right now. But we're just being a little bit more conservative than some other business plans you might see. Most likely, we will be cash flow positive more quickly than that, but I'd rather be safe than sorry.
No, understood, absolutely. And you had mentioned twice in the presentation that the Catskills was the first stop. So for those of us who are curious, what's the second stop?
So the big grand picture is there are other markets that we've identified where this is also a need. We've identified markets in Tennessee, in Texas, in California, in Florida, And not to get too far ahead of ourselves, but the ultimate plan is to build thousands of these, but they won't all be modern cabins. If we go to Wellington, which has a huge horse community and a massive need for rentals, we would build modern farmhouse. If we go to outside of Austin, Texas, which has a great weekend and lake community, we would build modern ranch. In Joshua Tree in California, we would build in the middle of the desert, modern hut or modern bungalow. So the architectural styles would pay credence to more traditional architectural styles of each area that we go into, but it is a modern spin. And the differentiating factor between us is we are building ground up all of our products, so we can control the quality, the consumer experience, but also build a product that inherently has value above the cost to build it day one.
Fair enough. Can we talk about the money for just a minute?
Yes.
All right. So the round you're raising is 10 million. What increments are you raising that in?
500,000 increments.
That was that was great. So 500,000. And what did I want to ask you about that? Oh, okay. So 500,000. So you finished your seed round, your GP round. You've moved on to LP. And are you going to be deploying as you fill that round? I.e., when you have enough, will you be starting to build right away? Because you had mentioned you own 2 pieces of property in the Catskills already.
So our first round, we are going to, from the friends and family, we're going to go ahead and build our first 3. As we do the 10 million, we want to get to a critical mass. And just because the interest that we've garnered so far with the 10 million, our investors want us to get to a critical mass. The critical mass of the raise would be 5 million. Once we get to 5 million, we will begin to deploy on building on our other property.
Fantastic. And I'd like to remind our audience that we'll be ending in about 3 to 5 minutes. So if you do have a question, please type it in. As Jarrod's told me, he'll answer all questions. So I think that's great. The markets that you go into for the different types of structure, will you be owning all the structure? Will you be licensing this technology to others? Or is it going to be proprietary? How's that going to work?
In terms of the real estate itself, we will own the real estate and have a controlling interest in all of the real estate that we build. In terms of the technology within the first 24 to 36 months will be proprietary. The reason it will be proprietary is our goal is to work out any kinks or issues we might have before going to the open market with the technology. Now, as much as I love to dive into the technology, it is a bit of a separate conversation that we do have with all of our investors, but we bring in our technology partner to also have that discussion. But we will not go to open market with the technology right away. There's some time in between to make sure that it is functioning at 100%.
That is fantastic. So you said you were going to break ground with the friends and family round. When are you going to break ground?
It'll be next month and towards middle to end of November. We'll at least, we hope to have our foundations in, and we're building on slab, which is good. So as long as we have the holes dug for the foundations, which we will have that by mid-November, we can still pour concrete into the beginning of December, even though it starts to get cold. We'll use quick drying concrete, and we'll also at that point in time have the driveway graded in and the trenching done for all of the electric and high-speed cable, and then the well and septic. Some of our properties actually already have some wells on them, but we'll go ahead and put the well and septic in as well. And then even if it's the middle of winter and it's snowing in March, we can still deliver the modular homes and install and complete them in the middle of winter. And that's one of the best things about building modular, you're not affected by the elements.
So the first one would be up?
First one we expect to be up by end of April, beginning of May. So that's about 7
months. You have the whole summer season
yes.
ahead of you. That is
yes.
fantastic. That's fantastic. All right. Well, would you care to add anything else before we close out this afternoon?
Other than we're not trying to reinvent the wheel, we're just trying to make it better. So we're not trying to reinvent renting. We're just trying to make renting better. And we're excited to work with any and everyone who work with us and have great strategic partners and build a very successful company.
Jarrod, thank you so very much. And everyone, Arthur should send out a note so you can get hold of Jarrod. And I'm going to be watching this. This is in my backyard, so I'll be watching this closely. Thank you so much.
Thanks, Wendy.
Have a great afternoon, everyone.